Is Tesla going bankrupt? Well, you certainly might think so if you pay attention to what the news has been saying. So we pulled just some random articles from Google News that talk about Tesla. You can see that mostly these are negative opinions. Tesla stock has never been this cheap and it could still drop further. Well, the first part of that sentence is not true. The second is probably true. Why Elon Musk's Twitter affair could cost him Tesla. Maybe that's the case. Nice typo there, folks. Musk jolts keep coming amid Tesla shares crash, etc., etc. And the question is, just how concerned should Tesla investors be? And it's not just Tesla investors, but if you've been watching this company for a while and looking for an opportunity to pick up some shares on the cheap, then prices are starting to become pretty attractive, and we'll show you some objective measures that prove that. Now, here's a look at the falling share price. It's always great to see these pundits talking about how Tesla's share price is crashing without putting that in context. So whenever you talk about the performance of a stock, you need to include a benchmark. Here we've done that. So you can see that over the past year, the NASDAQ tracker ETF has been down 32%, Google 37%, Tesla 57%, and ARK Innovation ETF, which holds 7.5% weighting position in Tesla, is down 66%. So it's probably not as dire as the media would like you to believe, especially when you consider something called beta. Beta is a way to measure the extent to which a stock moves relative to a benchmark. So a low beta stock will move less dramatically. It will have less volatility than its benchmark, whilst a high beta stock will move up and down very sharply. Tesla is a very high beta stock. You can see here on the left, these are all betas, the black numbers there. Tesla's high beta. We expect Tesla to move downwards more than the overall market. So this chart here, we just put this up. I believe this is a 5-year chart from Yahoo Finance, and you can see kind of gives you an idea of that the shares are priced at where they were several years back, though that doesn't tell us anything. We need to use some ratios to do a true comparison, which we'll do here shortly. Now, one of the criticisms that have been made about the falling share price surround Mr. Musk selling shares of the company. And you see, they always love to put the old hand on the head. If it's Mark Zuckerberg, then he's got to have that psychotic look in his eyes. But the media always picks the best, most flattering pictures. And here they're talking about Musk selling $3.6 billion of shares in Tesla. Well, put that in some context. That's a 5% portion of his total stake. And he remains, depending on what numbers you see, there's a lot of numbers floating around out there, but according to Refinitiv, he still has a 13.4% stake in the company. Now, for those of you who may not be too familiar with what Tesla does, they sell electric vehicles. That constitutes the majority of their revenues. Here we've taken information from their latest 10Q that shows the automotive segment revenues over the last 9 months, and you can see that those make up the biggest component of total revenues, which are $57 billion. At the bottom there, that table shows the breakdown by geography. So the United States is actually about 50% of Tesla's revenue. So when you see all the people who manufacture outrage on Twitter talking about how they're not going to buy Teslas, that's presuming they even could, then there will certainly be potentially some impact to the Tesla brand, but Tesla's also has 50% exposure to the rest of the world, and China's a big component of that, and they've been running into some problems in China. So perhaps given the bear market and potential recession that's affecting the United States, we can just generally expect that sales numbers wouldn't be as good as they would be when times are good. So one of the things that's came up is quite interesting. Elon Musk's bankers are considering Tesla margin loans to cut risky Twitter debt. So when we analyze this, we need to really separate Mr. Musk's activities from Tesla, the company. So what he's doing here is he's borrowing on margin, and some of you may be familiar with this. Retail investors, you shouldn't be, because you shouldn't be using margin. It's far too risky. But retail investors can borrow money against stocks they hold as collateral using what's called margin. So Elon Musk is doing the same thing. He's taking out loans against his stock holdings, and they say the remaining unpledged shares could secure a margin loan of more than $5 billion. And this is a key point here, at a 20% loan-to-value ratio. It's like when you take a loan against any asset, they're not going to give you the exact value of that. They're going to give you some percentage, and that's quite low. So 20% loan-to-value ratio, that's according to Bloomberg's calculations. If the share price falls sufficiently, then we would expect that Musk has to put up more collateral. What if he can't? What if there's a margin call that just takes him out? Well, we would assume that the lender then takes ownership of that stock and would act intelligently, not just dumping it on the market to liquidate it, but selling it over a period of time so that they can realize the maximum amount of money from that asset. So we really believe that what Mr. Musk gets up to in his own personal life in terms of his finances doesn't have a large bearing on Tesla, the company, other than perhaps putting downwards pressure on the share price. When you look at Tesla as a company, does a falling stock price decrease the likelihood of their survivability? Well, let's look at a couple key factors. One would be debt. So they had $2.41 billion in aggregate principal amount indebtedness. So for all practical purposes, that's easily covered by the $21.1 billion in cash they have on their books. And over the last 12 months, they've realized free cash flow from their operations of $9 billion. So now they have a cash-generating machine. Doesn't seem likely they're going to need to raise money. If they don't need to raise money, they don't have to worry about taking on debt. They don't have to worry about a very discounted stock price, having to sell more equity and not realize the maximum return from that. So it seems as if the falling stock price won't have a large impact on Tesla as a company. And here's the first slide of their last quarterly earnings call. These are great slides. It just throws up, we've highlighted in yellow there, what investors ought to be paying attention to, and that's survivability, not only the company thriving, but of course you want to pay attention to in bear markets, survivability. And you can see here that as long as they're generating positive cash flow, there's nothing to worry about. They have some of the strongest gross margins in the industry because they don't need to advertise. So the Tesla bull thesis is still there. They're having some growing pains as usual. As you can see here, this is a great picture of their factories and what they're up to and how they're producing vehicles with the Cybertruck coming online and the Tesla Semi. And here's an actual picture of their facility in Texas. Quite impressive. Now, a criticism being levied at Musk and at Tesla's board, which is an absolutely fair criticism, is that he's spending too much time on Twitter. Well, if you look at their 10Q, they specifically state, although Mr. Musk spends significant time with Tesla and is highly active in our management, he does not devote his full time and attention to Tesla. No kidding. He's got a lot going on. So he's selling perfumes and flamethrowers. He's got Neuralink. Here's just some of the companies, not all of them. He's got Neuralink, the Boring Company. He's got SpaceX, where he sits as CEO and chief engineer. And of course, Tesla at the top, and now Twitter. So he's always been distracted. Is Twitter the straw that breaks the camel's back? Maybe. It's more likely that Twitter is just creating a lot of visibility and everybody's suddenly being critical of how Mr. Musk spends his time. So perhaps the answer there would be to eventually work in a replacement CEO for Tesla. Or you can imagine that once he gets the Twitter situation under control, then perhaps that becomes less of an issue. But we wanted to talk a little bit about Tesla's valuation, and this was a piece we wrote just about 2.5 years ago. It's titled, "Here's Why Short Sellers Are Shorting Tesla." I'll put a link to this piece and other research pieces in the description of this video that are relevant. And we use a simple valuation ratio to value companies. We produced a video very recently. I'll put a link to that as well in the description of this video on why we use that ratio, and it's simply taking the market cap and dividing it by annualized revenue. So At the time we wrote this article you see here, price of the shares were $110. That would have been a simple valuation ratio of 14.5. Well, 4 months prior to that was when the market took a hit from the Rona. And at that time, shares traded as low as $30 a share. That was a simple valuation ratio of 4. So that's kind of the bottom there that we would expect, the watermark. And today, if we look at that simple valuation ratio, we take the $475 billion market cap, divide that by annualized revenues, and we get a number of 5.5. So Tesla shares would need to trade at $108 a share to match the pandemic panic valuations that we saw in March of 2020. Now, when it comes down to purchasing shares of Tesla, we manage a 38 tech stock portfolio, and certainly people ask, well, would you consider buying Tesla? This is a picture of our strategy in terms of size, and our optimal bucket, as you can see from target weightings there along the bottom, is large. So we look to invest in companies that are a market cap between $10 billion and $100 billion. So for example, when Google had their IPO, that was a $23 billion valuation. We actually participated in that IPO, and we sold out of our position when they started hiring adventure cartoonists several years back. So what we look to do are invest in companies in these lower size buckets and then harvest returns when they become mega caps, that is above $100 billion. Sometimes companies are too small. We don't invest less than $1 billion market cap. But when Amazon had their IPO, we wouldn't have invested in that because they actually were valued at around $500 million. And eventually that would have worked its way through the bucket. So Tesla isn't a company that we would consider buying shares in, though we certainly think that the latest valuations are starting to look quite attractive for the reasons that we presented in this presentation. So certainly Tesla's stock can fall much further. The media is generating a lot of noise. Don't pay attention to that. Half of them don't know what they're talking about. They don't provide context around what they're doing, and lots have no integrity. So pay attention to key metrics in the quarterly decks provided by the company. Try to keep Elon Musk's personal financial situation independent of Tesla. Try to view those as two separate components. And just be happy that you can buy cheap shares of a great company. So I've put up another video here that you might be interested in. It's on finding the next Tesla, but please make sure you first click the Nanalyze icon right here and subscribe to our channel. Thanks for taking your time to watch this today.